Hey, what's up, guys? This is MC Fire.
Ice Cube?
We are tapping in with you again with another market recap. But really today it's a hot take because we really just want to go over the plays that are coming up for next week and something you can potentially capitalize. Typically, our plays we look at them for 2 days to around 3 weeks, so act accordingly. But without further ado, let's get right into it. Sweet. So, I guess the first thing on our list is we want to, well, before we get to that, we want to just tell you guys, you guys need to be responsible, okay? So, by far, this is not financial advice, number one. And then number two, make sure you have a plan going into 2025. It is already the middle of February, right? So you definitely need to plan for success. And what do I mean by that? What's coming up? Tax season. So I don't want to be a stickler here. I'm not one to tell you what to do with your money, but you should already have a plan financially to add to your asset column from your income tax. So if you're getting money back from Uncle Sam, this isn't not the time to go buy a TV. Certainly isn't the time to go buy a new car because interest rates are at all-time highs. What should you be doing with your money? What do you think will have it?
Investing.
Investing in said assets. Exactly. If you are investing, then it makes it easier for you in the long run. And what better time than to get a big pile of money? Some people it might be getting assets, other people might be getting out of debt. Whatever you do, right? Do the financially responsible thing first. Then, if there's any excess funds, then you can go have fun, right? And I'd say make sure you get a good person to do your taxes. If you guys want a really good person, you guys can hit us up in the comments below. Having a great person, we'll plug you to them. It'll be absolutely amazing. You won't be let down. So, without further ado, let's get into the hot takes. So, first one we have on our list here, we'll come to XLP. Since it's here though, we'll come back to it. We'll come back to XLP. But we don't worry, this is updated, but we got them written down, right? So the first one we got is CVNA. CVNA, right? Good old Carvana. What do you know about Carvana, Q? Have you heard about them before? Never heard about Carvana? Do you know what
No,
they do?
no.
So
Cars.
they do cars. Very good. So it's kind of hinted in the name, but essentially Carvana is the people that deliver cars to you. So they're cheaper because they don't necessarily have to go through a dealership, right? They don't have all the whole overhead and paying people to sell you the car. You just go online, pick the car you like, the color you like, and they'll deliver it to your front door. This new model, I think, is on our new what I call new kids on the block. And our new kids on the block, right, are companies that I believe going into the future are going to be what we need to watch out for, right? Most of the stocks are overvalued. So if most of the stocks are overvalued, where can you still find value? Where is the next Palantir? Where is the next AVGO? Where is the next big play, right? Nvidia, where is those companies at that have either long-term growth or a new spin on an old concept? Carvana carvana is one of those things that has a new spin on an old concept. But if people need to buy cars but they're not going to get them any cheaper because cars and the price are going up, they're coming down a little bit, but people are still not willing to pay that high premium. So if you know the car that you want and you can have it delivered and you can pay for it, get it financed online, why not do that instead of pay for all that overhead and extra add-ons, right? That the dealer pretty much adds on for the pleasure of shaking his hand and giving you a test drive. You probably will like the car, and if you buy uh, through Carvana, you save money. That's the name of the game there. So Carvana showing a nice clean setup here. Major pullback after earnings. But as you guys can see from some of the other pullbacks here, once it crossed kind of that threshold, you could take the buy, have a nice juicy rip, and actually tapped highs and went a little bit beyond it. So this is kind of what we'd like to see. Nice pullback deep inside of the moving average cloud there, and then it popped back out of there. So this it might be the start of a brand new setup, right? Doesn't necessarily mean we have to take the setup. Uh, there could be a lot more pullback. So we're looking for it to break at least a halfway mark on this major candle before we even consider taking that setup. Does that make sense?
Mhm.
Sweet. Next we have on their hood. So Q, you should know this company. Which company? Robinhood. What do they do?
Trading platform.
Trading platform. Very good. So if you notice, um, is this number down here increasing or is it decreasing? Can't see it. I think it's increasing, right?
Mm-hmm.
So that's Robinhood's supposed claimed earnings. Now, if you notice, it's increasing. It was 3, then 18, 21, 17, and now 1.01. What does that mean? This means that retail has really stepped up and started increasing their purchases. So so as more people get on the hype train, especially as the market reaches highs, I want you guys to notice a correlation here. The market is at all-time highs. And a company like Robinhood's revenues, who pretty much they cater to which kind of trader? Are they institutional traders or retail traders?
New
What
traders.
new traders? Very good. So they're catering to new traders. So if they're profitable, that means new traders are getting on the platform, they're making purchases, they're getting into the game. Now notice when they're getting into the game. They're getting into the game up here at all-time highs. We look at the weekly, up here is when they're getting into the game, right? We're going to go back to Hood and we're going to take a look at when people should be getting into the game, right? People should be getting into the game way before this, right? They shouldn't be getting into the game now. They should be getting into the game when things are cheap. Now, why do I think that this is still a good buy? I still think it's a good buy because if you know people's habits and tendencies, the setup is still here, the setup is still in play, and the market is still at highs. So while the market is still at highs, you're going to continue to see FOMO, euphoria, and people talk about the stock, get their friends to get the app, and then start trading on the app while the market is at all-time highs, trying to catch moves like Palantir, AVGO, and Nvidia after they've already made 100, 1,000, and multiple hundreds of percent. So why am I bringing this one to the front of the classroom? Yes, it's a setup, but the setup is still in play as long as there's FOMO in the market. Okay, so it's still traded accordingly. If it breaks the high of 59.18, you could potentially take that play, and if it stops out, we would stop it out at 54.24. So $54.24 is the stop out. Next one, and we're happy to bring this one to the front of the classroom. SM CI, more for a lesson than for actual setup. So in the lesson, right, we added something new to our playbook. Now, if you guys know, if you've been watching our videos for any length of time, we had kind of a mixed bag about this setup. Now look, it's in a downtrend, right? The uptrend hadn't registered yet. So it was in a downtrend. And then we recently got up here, there was a significant buy order. We were like, well, if it trades below here, right, we could take the sell. But also, there was an opportunity to take a buy. Now, what I noticed was look at this. You have a buy, followed on by an outside sell, right? Followed on by another outside sell because it gapped up and then sold. So essentially, a buy and sell and then a buy. So what does that do? That essentially sets in a nice juicy block of orders, positive or negative, that's right here. And then what happens once it really breaks those blocks of orders, right? This is 4 days of the market not going back and forth post earnings. So you're not really getting into earnings territory as a regards to causing this to move up or down. This was 4 days going sideways during earnings. And then when it actually broke, boom, pop to the upside, pretty significant. This is going to be added to our playbook. Whenever you see multiple stacked red candles in the same level or stacked green candles in the same level, watch out. That means that there could be a really big move setting up, especially if you see a trigger that doesn't really get executed, followed on by a negative, followed on by a positive, right? Shout out to Oliver Velez because he calls stuff like this what they call red bar ignored, or a green sounding red. So you got a green candle, red, red, green, right? So whenever you see that, that is a very powerful play that has a very high percentage chance of very nice follow through price wise. Something to so basically we're bringing this to the front of the classroom to show you we got a new playbook.
Wouldn't it be concerning because the earnings are right there?
It would be, but the earnings in this case, if you're excuse me, if you're going into earnings, right? Like coming in here, we're going into earnings, and then it would be a problem. But this is the day right here that you actually have earnings. So you had already had this green candle, and we were actually looking for the sell. You get a red candle, right? But the green candle never triggers. You see that? So you get a green candle, you get a outsized red candle because the candles that we're not paying attention to are grayed out. So we care about the ones that are colored in. This is a red candle, outsized red candle, followed by another outsized red candle. But it really didn't go anywhere, right? It didn't break the low. Does that make sense? So a lot of people are getting in, but it didn't go anywhere. They're not getting paid. Does that make sense? And so now you have an outsized green candle, but it really didn't go anywhere special. Now, this next candle, once it breaks the high of that, what does it do next? It really gets going because that's a combination of momentum, the people that already wanted to buy, and these people having to liquidate their positions. So it rips. It's like a little, what they call a squeeze. Okay. But it's just a squeeze right here. It's a nice, some people call it an order block or squeeze, whatever you want to call it. But this is what it would look like, where you see a very nice move that goes from 40 all the way up to highs of 66. That's a play right there. It's pretty juicy play, right? In the middle, it was like 40. Let's say you took the buy at 43 and made it all the way up to $66. So really good play on SMCI. But this is why we're adding it to the playbook, because you're going to see it again as we bring up another play comes into the front of the classroom. Maybe we can take a play on it. The next thing we want to grab is AMT. So good question on the earnings, but even with earnings, it didn't do much post earnings. You would think it would. That's actually more of a sign that hey, something is happening underneath the hood there. So this is a pretty standard play, right? You're in a downtrend. You get an outsized candle to the upside. Now is earnings coming up, but there's still an argument for earnings or no earnings, right? You get this right here, right? You got a squeeze in play. Unbalanced volume is red. Your 21 period moving average is down, and you get an outsized candle to the upside. So if it breaks the low, what do you think you have to watch out for? Like what do you need to look out for, even though you're going to the downside?
Uh, trend change going up.
Mm-hmm. Do you think it would probably start at this level right here?
Mm-hmm.
Yeah. So like if it was gonna bounce off this trend change going up, it probably would stop right here. So some people could say, well, okay, I could take the break of this, but it's actually still not wrong for you to bend your rules and say, okay, I'll take the break of a 184. If it breaks below the level, then I'll get down so it can maybe take this rotation. Okay. That's actually fair, right? American Tower, look out for it to the downside. You got Walmart's up next, WMT. Now, I like this setup. It is a little extended, but the reason why I like it is because you're seeing America be separated into two different categories. And I'm gonna bring us to the front of the classroom, right? Because we watch a lot of street interviews and financial podcasts, right? We like the Dave Ramsey's and the Robert Kiyosaki's and the Cato Institutes that talk about gold and silver. We watch the Bloombergs. And we also watch a lot of channels where people are talking about, not paying their car notes on time, rising property taxes, insurance, why they bought a house in 2025, they want to sell it back, buyer's remorse, all that stuff, special appraisals. Now, one thing that I notice in all of these is that people are struggling. Wouldn't you say?
Yeah.
What do you think they're struggling the most with? Like, what does everybody keep saying?
They don't got much money.
They don't got a lot of cash. So, if you don't have a lot of cash, are you more likely to go to the neighborhood Walmart, Costco, or Target?
Um,
Probably the neighborhood Walmart. Because I know it sounds weird. It's actually better to go to Costco, but Costco does their business model different, right? You buy in bulk, so you buy more than what you probably would need. But to do that, you pay $60 for the administration and you pay in bulk. So you buy in bulk. Now, what that does is the per unit cost goes down, like a lot actually. But most people just want to get a few items. So if we go look at something like Walmart, I'm assuming that that's going to be people's first choice. And you're seeing that. You're seeing in the revenue column here, right? It goes from 58 to 66. Which tells me that, yeah, I believe as if the economy continues to get worse, that more people are gonna go to places like Walmart. Now we can look, and there's a setup here on Walmart post earnings. It's sold off, but I believe that if it breaks above this $109, which is a psychological level, then you could see it at least get back to highs before you would have to take it off. So very similar to what it did here. Now, yes, granted, it took longer than 3 weeks to do that.
they don't see what you're looking at.
Oh, sorry. Apologies, guys. Thank you, Q. Really appreciate that. God, I'm showing you guys stuff. You don't even see it. I'll bring this to the front of the classroom. So there is a setup on Walmart, just like right here on this day. If you can see where my cursor is. And if it breaks above this psychological level of $100.09, we would like to potentially see a push to close the gap and at least approach highs, right? And if not, it'll stop out of the low. Now, why do I think that'll happen? It's done it before, right? See here, it wasn't a gap, but as it crossed above with our setup in an uptrend, it does eventually ride back to the highs. Now, granted, you've got it's more than 3 weeks. So what you could do is what I probably will start doing is taking a buy and then selling against the buy. So let's say I get a 3 week contract to the upside, I'll probably sell 3 1 week contracts against that, right? Meaning I buy one contract to the upside and then sell against that contract for some premium or cash flow. Okay. So getting both and then collecting that premium every week for some additional cash flow. That is Walmart. Now we can compare that to Target TGT and see how it's doing to kind of prove the point, right? I hadn't looked at Target in a while, but as you can see, it doesn't take a rocket scientist to know that if given a rate where you're the company that has more expensive items and the other company has cheaper items, when people have money, they will go get a more premium product from someplace like Target, who is curating premium products at a slightly higher price. Whereas Walmart curates, generic, what they call the generic brand, right? You get the best price where you can put it on the shelf and stock it up in bulk, and people will buy it. So getting Walmart versus Target kind of makes sense in this environment, right? You're not too late for that, so don't think you kind of missed it. The next play that we've got lined up for you guys is AI. AI just as it sounds. Ticker symbol A, Alpha, and India, right? AI. Boom. Now that's at the front of the classroom. So AI, what I like about AI is the revenue is still negative, but it's making headway. And if it's doing okay, negative, then once they figure it out and it starts to go positive, this thing can really explode, right? And so we want to, it is potential buy, right? If you get across above 30.58, $30.58, we could potentially see a early buy here with a stop out below 28.37. That would be what it is. But if you can see back, it can get as high as 183. So this could be something that you could put on your radar for, like I said, maybe one of the new kids on the block, because we're looking for things that have longevity, right? A real plan for growth. And sometimes you're going to be looking at things that are negative before they go positive. Case in point, look at this chart. Keep this chart in mind. It sold off, went flat, right? All the earnings are negative. All the earnings are negative, right? Keep that in mind. Now we'll go to Palantir. I'm going to go ahead and mute this right now. Boom. Thank you. So look at Palantir. And if we go back, Palantir, if we zoom in for the first part of Palantir's life history, right? Negative, all negative, right? Nice rally to highs, so to speak, and then a sell off, gradually selling off during this negative period. Okay. Now, if you notice, this is around the time when we took our first initial buy, right here. Palantir is -8, then it goes 2, then it goes -1, right? Once you start seeing it go positive, there's going to start being some life pumped into the stock slowly but surely. Got to kind of be patient for these. But if you notice, right, once it goes to 5, once it goes from 1 to 5, we had already amassed a good amount of stock. So we were here and we bought some more before that, and then we bought some more a little after that. And then there's the huge rally, and then we bought some more, and so on and so forth. And the rest is kind of history. Now, why do I bring that to the front of the classroom? Because when you go back to AI, right, you're going to try to rinse and repeat. Doesn't mean it has to work out that way. But if you're looking for the next Palantir, the next AVGO, the next thing, it's not going to be at all-time highs. It's going to be here. It's going to be when earnings are negative and they're starting to go positive and the trend's kind of flat. People believe in the stock, you can tell, because it was already at $183, right? Just like Palantir did that pretty big move high. But look at the earnings calls around the earnings around that. -22nd and -24, -32, -23, right? And so as it sells off, right, people are like, well, I'm not getting paid. Let me pull out. That's obviously not us. We want to buy profitable companies. Revenue is the lifeblood of any business. So we just be patient, bide our time. And then once it starts to get to the point where it's, well, kind of starting like it might start going positive once they figure it out, that's when you want to jump on the wagon slightly early, right? You don't want to be late, but you do want to be slightly early. Okay. So getting in some at this critical buy is good. If it gets down to 3 ATR, that's negative 3 ATR, excuse me, that's also good. We talked about that in some of our longer term strategies, but watch out for AI and keep that on your radar. Another good one that we're bringing to the front of the classroom, ARK. ARK. So ARK is an ETF. It's did you know this is a female hedge fund manager? Her name is Kathy Woods, and she rocks. She's awesome.
Really?
Yeah, she's pretty good. So ARK has kind of been hammered because a lot of ARK, if you look at ARK, okay, sorry, we can look it up in ETFDB on Sunday, but ARK takes a different approach to looking at the market. Very, very different. Um, and it looks for things that are gonna cut the noise, right? Be extremely disruptive. So kind of like how Uber was for the taxi industry, or how Netflix was for Redbox and Blockbuster, right? Things are gonna like completely almost wipe out entire markets by its disruption, take a lot of market share. She invests in that, but it is a little risky, as you could see, right? Massive drop here. And so now we're looking to rebound as things do start to get what? Disrupted. People are looking for new alternatives, which you would go to buy, like you might go to a car dealership to buy a car. You might just completely go online and shop for a car on Carvana like you do with Amazon. So a disruptive model like this is really, really cool. And we like the fact that it's got a setup candles and ETF, so the risk is distributed. And a lot of times, ETFs, when they trigger, it's not like a false trigger. So you're in an uptrend. This trigger went up, but you don't ever really get stopped out. Get close, but then there's another opportunity to take a buy. And then what does it do? Wham, absolutely takes off, right? The next setup candle actually didn't trigger within our time span, but that ran, right? This one triggered 2 days of upside. Remember, we tell you guys that's not a lot, but we also say that typically the plays, the way they work, is if they trigger within the time span, you can expect that to run 2 days to 3 weeks, right? So 2 days to 3 weeks kind of deal. And then now we're up here. So we're looking for this one to play out forward as well. Moving right along, Axion, AXON. So AXON, we have this pulled up on the list. Really nice pullback. The only thing that is concerning is earnings. Now you see they've kind of been struggling a little bit from this 115. Now it's like 50 cents. Now it's 86, but it absolutely exploded. Don't know what that's all about. You have decent earnings and the company like absolutely goes bananas to the upside, right? So shout out to it. But think about this though. Look at this. When you ask about earnings is coming up, but look, you have a setup right here. So it's kind of 50-50. It doesn't necessarily mean that it's got to go to the upside, as we found out with MU. MU didn't do that at all, right? But we wanted it to go to the upside, and earnings absolutely stopped the yard. So and it has since just never really done anything. It's kind of been very choppy. So MU was a showcase of, even though earnings was better, the market didn't like it. So it really just kind of depends. There is no like 100% strategy. But I will say that if you have a setup on the board, take it and do your risk accordingly. That's why we tell people you set your risk on the buy, not the sell, right? Your risk isn't defined when you sell something. Your risk is defined when you buy something. So try to set in the most you're willing to lose, and that's what you will buy with, especially if you're a beginner. K-Web is up next. K-Web. So we like K-Web, and remember when I was telling you guys about that setup, right? The new one we put in the playbook. Now I'm going to bring this to the front of the classroom and highlight it for you, okay? There we go. So if you see right here, this little block, you got negative candle, really didn't go anywhere, right? It's already kind of extended, kind of in no man's land between the positive 3 ATR and the moving average cloud, right? It's kind of in the middle. But what are we seeing? Something very similar to what we kind of see here. You got a green bar, nice red bar, then a green bar. So there's probably some continuation there, right? A lot of fighting going on. But then once that fight gets resolved, you really see some expansion away from that, right? After the fight's done, there's got to be a winner. There's got to be a winner and there's got to be a loser. So this fight right here expanded to the upside. This is where we took some profits. We also took some more profits. And again, we're still in this play. Now, what I did notice is that negative, boom, right? gap up, kind of go negative again, gap down, and then another green candle. So, what are we going to do with this right now that it's gapped here, gone kind of negative, positive? It's kind of choppy. There's a real fight going on at this level. So whoever wins, it's going to be a winner. I'm anticipating in a big way, probably back up to highs or even beyond that to 3 ATR, because you're seeing how the candles are stacking. They're stacking in a way where you could see there's a real fight going on, negative, positive, positive, negative, really in this tight little spot. It's not coming up on the squeeze, but it is coming up in our system, and that's what we like to see, right? These stack, they're kind of like distribution, but you're seeing these in a little bit different manner. These are up here where you would anticipate people wanting to sell back to the moving average, but it doesn't. There's a fight going on here, a real fight. So somebody's still buying this, right? Because if people are probably more prone to get aggressive in the selling, who's stepping in and buying? That's really the question. Let's go to Link. Next one on the list. Good old Link. Link. Boom. So good old Link. So Link, $7 stock. Not too crazy, Mr. Link. $7. Recently new uptrend. We like that. Very nice pullback in a nice tight little setup candle. Can't ask for a better setup, right? So watch out for Link. It's cheap. For those people who don't have big money in the bank and shorty what you drink, this is perfect for you, right? If it crosses above that $8.03, the market mechanics are still out there working, and it's probably going to work for you, right? Potentially see a trend back up to the first sign of danger, first pivot, at least watch it move maybe $1 before you have to make a decision. So for $1, target highs at 10, but $1 is where I would say confidently, if we can get a trade above that, we could potentially see it get into this range. You should be fine. Rivian. Now, in other news, in the EV space, recently, one of Rivian and Tesla's and BYD's rivals actually went out of business. Good old Nikola. So some people that worked for Nikola, a lot of whistleblowers and a lot of nefarious actions coming out of the company Nikola. But Rivian, on the other hand, you see a lot of those everywhere, right? They call it the emoji car because it's got these big headlights that look like.
We call it emoji car.
Oh, so nobody else calls it. No, I thought it was. I thought it was trending. Guys, as you guys know, everything we do trends. Like it's just going straight to the trend yard. But but yeah, we call it the emoji car, and what's cool is people are actually buying them. That's really the point. We see them on the road, right? And so the emoji car, that's what we're gonna call it, is got a setup, right? It's in an uptrend. There's a pullback, and there's an opportunity to get it above $14. Again, relatively new company again, and their earnings are negative. Now the problem that the company is going to have is people's appetite for cars, right? Rivian's got a fighting chance because there's not a BYD in America. BYD is being bought globally, and if you don't know what BYD is, it's the Chinese manufacturer. Like it's basically China's Tesla. This is BYD. We bought BYD off this setup, and it absolutely mind blowing took off. Right, we sold multiple on all the way up. We even sold some today. So why do I say that? Is because BYD, on the other hand, is expanding. While Tesla and Rivian are fighting to maintain their market share, they're having a hard time being competitive. Where BYD, in every facet of how cheap it is, the quality that they can bring to the table, and the deals that you can get for them are absolutely just, and it shows, right? It clearly shows, right? And we kind of bagged this train. Not a lot of people know about this, right? No, why? Because in America, because You don't see any BYD cars. But in Europe, they're starting to sprout up everywhere. Mexico, same thing. They're really big in Russia. So people here don't know about this company because they're not here. But we don't live in a bubble. We live in a globalized world. So keep this company on your radar. Uh, we told you guys about BYD. We told you that was on our radar. We actually told you that we were buying this, and that we're reaping the benefits from that pie. But look, kind of keep a global scope on these things because yes, America's a flight to safety, but some places really do things better than we do, and BYD is one of those good companies. Rivian still got a setup, but I'm hesitant, so I tell you guys, this isn't financial advice, train your risk accordingly. But I just gotta tell you, there's a setup here, and there's one company that's probably a better bargain. Maybe not now. The move's already kind of happened, but this is still in play. People are actually purchasing the car, and they're losing rivals like Nikola. Right? Nikola was fraught with corruption and a whole bunch of junk. So that's good for Rivian. It's good for Tesla, and it's good for BYD. You also have XLP, last but not least. So, like we said, with just like with the ARC, don't see a lot of the ETFs false trigger, right? When they have a setup, they typically work out really, really well. When you have a setup in the ETF, there probably isn't going to be, this is why we like them, there isn't going to be much of a false fire. Here it drops, it crosses above, and then it kind of takes off. We saw that here again here. It gets down to close to it, and it doesn't actually break below the low. It does end up rallying, and then you'll see the same thing for XLF. One of the recent ones we did, we took the trigger and trade. Here, I'll bring it to the front of the classroom here off of here, right? We saw this negative candle set in, and we got a buy trigger, boom, and then it doesn't rally for at least the next 2 days or 3 weeks. Absolutely, right? We actually, this was religious observance, so we took it on the next day, actually on a great pullback, and then we bought, roll, and then close, or roll partial close, and that we closed somewhere else. I don't remember where it probably expired, worthless or whatever, or profitable really, because this was a roll. It probably expired somewhere profitable. We got a cash for it, but the reality is, what kind of what's the point? The point is this trigger ran for 2 days to 3 weeks. Even this trigger back here ran for the next 2 days, not necessarily directly for the next 2 days. It pulled back slightly, and then 1, 2, nice push to about where these sellers kind of stepped in. So, did it run for 2 days? Yes, 2 days to 3 weeks. That's why we stick by that, and we it's worked out really good for us. Setup right here, same thing. Triggered ETF, ran for basically a week. So these triggers for these ETFs, we love them. I don't sleep on the triggers for the ETFs, because they are pretty powerful when they actually do trigger. But you got to be patient. We got this set up. Now this trigger isn't necessarily to the upside; it's to the downside. But watch out. It could set in to the downside and really make a move to the downside, right? So keep that in mind. Okay. Keep that in mind. If it happens within the next 4 or 5 days, then we could see a potential downside move. You'll see even here, right? It ripped 1, 2, 3, 4. On the fifth day, it's breaking below that low, but it really by 5 days, it's kind of out of our ballpark. We want to see it wash that setup candle, right? Really almost in the first 2 days. The earlier the better. The earlier the better. If it gets washed, awesome. So it rips. This one doesn't get washed. It's still kind of going up, and here we are. So we just keep walking that trigger up. And then potentially, if we get it, let's say it goes down the next day, boom, we'll be looking to take that trade with momentum, potentially back down to the 77.61 level. That's ideal, right? Closing this gap, so to speak. So, guys, it's been fun. It's been awesome. But that's all the time we have for today. Thank you so very much. If you guys have questions on anything in the video, you want to ask Q a question, or you guys want to talk about like taxes with a professional, not with us. We're not the professionals in that. But if you want to actually get talk to a tax professional about your taxes, maybe getting a better return in finding legal deductions properly on your taxes, reach out to us in the comments. We guys can plug you in with a tax professional that has absolutely blessed us. There's so many things with our business in that we get deductions for that we didn't even know we qualified for. So, and then we made some financial moves that she helped guide us through as well. So, you guys definitely, please tap in with us. We want to get you guys paid so that you can play in the markets. Okay.
Mm-hmm.
Yes, ma'am. So this is MC Fire,
And Ice Cube.
and we are gonna holla at you guys later. Peace.
Shalom.
Shalom.